Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Now, with just about 2 hours to go until U.S. stocks close, the Nasdaq-100 is trading lower, however, outperforming the other indexes. And part of that is what's happening with energy prices. And to help us explain that, we have Sean Cruz. He's a manager of trading services over at TD Ameritrade. And Sean, it appears to be markets are bottoming out at these levels. The Nasdaq-100 is hitting a range, and taking valuations into context here. Let's take a look at our first chart regarding the Nasdaq-100 and a couple of the drivers that you're looking at.
Yeah, and when you get panic selling, sometimes fundamentals momentarily go out the window, and that's sort of what you saw here, where you look at that just on the price to sales ratio, which I think is important to look at when you're just looking generally at revenue. The price to sales ratio of this, it dropped down pretty far out of any of those bands that we have established here. Now, the 2-year average for the price to sales ratio of the Nasdaq-100 is about 3.6 times. And if you look at that, we got down closer to 3 at one point. So we're recovering now. We're at 3.4 times the price to sales number. So we're getting back up to that. And I think what this indicates is that the panic is over. A lot of the liquidations seem to be behind us, that to the extent there was forced selling going on. And then also, as we're getting less volatile and the daily swings are becoming more and more muted, I think that's driving some improved investor sentiment, which is also acting as another stabilizing factor. And it looks like things are starting to gravitate towards at least some of those historical ranges that we're seeing. And that's what it looks like here. Like the Nasdaq-100 is trying to make its way back up to that sort of 2-year average of around 3.6 times price to sales. The levels I think that are going to be significant to watch. I think that 8,000 level is going to be something we need to really break through, and that might be a clear indication that there's a significant amount of optimism returning to the market.
All right, if we take a look at our next slide here, this is the Nasdaq-100 relative to what we're seeing in the energy complex. And it makes sense that you'd see the Nasdaq-100 outperform because you don't have that much of a heavy weighting of energy in the Nasdaq-100.
Yeah, and it's the nature of the companies that go into the Nasdaq that are helping here. If they're not actually just tech companies themselves, they're companies that are innovative or have done a very good job of pushing the boundary of tech in whatever industry or sector that they are in. And those companies right now, I think, are being rewarded where maybe they're not being as disrupted by a lot of what you're having to see these companies do in terms of working from home, finding other solutions. The companies that have made the investments in tech and have been more innovative in their processes are actually, I think, being rewarded right now. And if you're looking just at market capitalization of these companies, some of these energy companies, the S&P 500, that market capitalization, the sort of the destruction of shareholder value in terms of market cap, down over 50% since the start of the year. Whereas if you're looking at the NASDAQ, you're down just under 10%, so about 9.5%. So certainly those companies, those tech companies, have held up much better as this sell-off has been going on. And I think a lot of investors think those could also be the companies that are very well positioned to rebound sooner rather than later, and then also have a sustainable rebound as we move out of this as well, because I think more and more companies now are realizing the value of investing in technology and being innovative in their day-to-day business processes, and that's going to translate to some pretty solid demand for the products and services of a lot of these tech companies moving forward.
All right, and let's take a look at another sector here on our third and fourth slides, the airline sector. That they're still going to continue to struggle with supply and demand. That certainly hasn't balanced out yet.
It hasn't. And I think, one, we really are trying to get a feel for how long is this going to last, and what's consumer behavior going to be like once we get past this. And there's just a few things you can look at in terms of, one, an area that is a key consumer of energy. If you think of the airline industry, jets, and their need for fuel to fly their passengers around, this is a good sort of example of how a drop in demand can translate back into energy prices via these price channels. And one, if you just look, you see from the airport standpoints, what the airports are reporting, the completion factors started out, looking at 100% nearly, and they've dropped down to 50% over the course of the month. The number of canceled flights was extremely low to start the month, and now they've skyrocketed over the course. And now, as of yesterday, there was 11,220 canceled flights. You can also look at passenger traffic and capacity, and that's where the supply and demand issues come into play. Passenger traffic, that demand has dropped 70% year over year. Whereas if you look at capacity and what we're using, available seat miles, that's actually only down 23%. So the airlines still have a lot more cutting to do in terms of cutting capacity, or they're going to continue to oversupply their own market, so to speak. And that's going to be, I think, a continued driver of volatility and just risk for investors who are maybe looking for things to go out and maybe buy on some of these pullbacks. If you're looking for something to see if this is a bottom or a good entry point, there's still some more capacity cuts it looks like these airlines are going to have to do, and that still could put more downward pressure on some of these energy products that they use, particularly in jet fuel. And if you just look at the daily jet price or jet fuel index, that's also gone from about $2 to start the year, and now we're hovering, somewhere around 60 or 70 cents. So I think, once again, if you're looking at that right now, started out at $2, now we're down to 72 cents a gallon for fuel. That kind of shows how that demand's dropping off in the airline industry, and then it's that drop in demand's translating to lower prices for fuel, and that's sort of how that translates back. That gets transmitted back into impacting the energy sector.
All right, and exactly, that was the last chart that I wanted to show here. It's like the energy sector just can't get out of its way. There's no reason to pay up for jet fuel.
There really isn't. And when you think about the number of, when we talk about airlines cutting capacity, we've heard anecdotally stories of people getting on flights and there's 5 or 6 people on the flight. There's really almost nobody on there. So but nonetheless, if that flight takes off, there's still fuel being consumed, whether they're flying 5 people or 200 people. Certainly they're going to need less fuel because it's lighter, but they're still just going to need that sort of baseline amount of fuel to get the thing off the ground from point A to point B. So as they start cutting capacity, they're going to start cutting more and more flights. That's going to be more fuel demand that's going to be dropping out of the airline sector. And I think that's something that you can now start putting your head around, where else you're going to start seeing that elsewhere in the energy complex, because a lot of the energy that's used just in day-to-day economic activity comes from a lot of what these energy companies supply, like ExxonMobil, Chevron. So they're going to probably see continued drop in demand, which is going to continue to lower prices.
All right, Sean, great stuff as always. Thanks so much for joining me.
Thank you.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.